What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about one stock, one company that has turned itself around significantly with huge amounts of profitability, excellent free cash flows, negative net debt, and is also buying shares. This is a company that I mentioned a couple times a few months ago, a few weeks ago, a few years ago. We've been talking about this on the channel and how I believe it's got a lot of potential to unlock because I've had personal experiences with their service, and it's been nothing short of absolutely amazing. So hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. The first week of the month is the best time to join. I did open up a couple more spots if you're interested in joining and of course taking advantage of that. And I also want to remind everyone that tonight is when the sale ends for our courses. The Labor Day sale ends tonight. So the coupon code is going to be Labor4 if you want to take advantage of individual course discounts, so 50 to 60%, and the bundle, which is the best value, includes all three courses, over 100 plus video lectures and 20 plus hours of content. Literally everything that's here is going to be in those courses. If you want to learn everything from scratch, very beginner friendly, 60% off. Bundle Labor4 is going to be that coupon code, and this does expire tonight. So after midnight, this sale is going to be gone. So the company we are talking about today is going to be Airbnb, and Airbnb is actually going to be added to the S&P 500 on September 18th. So reading further, you'll notice that Airbnb will replace Lincoln National and Newland brands because Blackstone is also being added. So Blackstone and Airbnb will replace Lincoln, National, and Newell brands prior to the start of trading on September 18th. S&P Dow Jones Indices said in a press release late Friday. And as I've mentioned before, Airbnb is, in my opinion at least, a phenomenal company, more specifically for the experiences. I've booked a ton of experiences with Airbnb in Malaysia, in London, in Dubai, in so many different places, and it's been incredible. I mean, the people that are hosting there are phenomenal. May not be able to say the same thing about the experience with the actual hosting for rooms, because I've had different types of experiences. In fact, recently when I did move to Dubai earlier, I was in Airbnb and I did not have a great experience. And I actually mentioned this in our Discord as well. And jokingly, we did mention that we are shorting Airbnb. But when I spoke to the customer service rep at Airbnb, they were kind enough to refund everything back to my account. And they did put the customer first, right? The customer, me being myself and people who are actually booking these on their platform, instead of course, siding with the host and all those things. So I did explain the situation, and they were kind enough to obviously refund for the nights that I wasn't staying at that place. So nonetheless, I mean, in my opinion, experiences are where it's at. Gives everyone the opportunity, especially if you're traveling, if you're a solo traveler. Airbnb experiences are just 10 out of 10, one of the best things I've done. So I highly recommend you to check it out if you are traveling by yourself on your next adventure. You can look into some of the experiences that are around the places that you're traveling. So when it comes to revenue, $2.5 billion revenue here in the second quarter 2023. That was up 18% on a year-over-year basis. Net income also positive now, so they are now turning the corner towards profitability, and that's one of the reasons why they're being added to the S&P 500 is because profitability is important. So second quarter net income was $650 million. And that was an improvement of $271 million from second quarter 2022. So on a year-over-year basis, adjusted EBITDA $819 million, representing a 15% increase year over year. And more importantly, free cash flows of $900 million. That's up 13% on a year-over-year basis, and $3.9 billion on a trailing 12-month basis. And that's a 43% margin for free cash flows. So incredible numbers. $19.1 billion in gross bookings. That's a 13% increase year over year. And nights and experiences booked $115 million. That's up 11% on a year over year basis. And quarterly revenue, again, growing and moving in the right direction. This is going to be the net income, which again, second quarter 22, second quarter 23, both positive and growing. And adjusted EBITDA also moving in the right direction. So the company has turned the corner towards profitability. And that's exactly what we want to see from companies that can actually achieve profitability. That's what makes the business sustainable long term. And free cash flow, again, $3.9 billion, a 43% increase on a year-over-year basis. On a trailing basis, and shares outstanding has been going down from 702 million down to under 700 million as of June 2023 as well. So very nice consistent share buyback from the company, so they're not issuing a lot of shares. For third quarter 2023, we expect to deliver revenues of $3.3 to $3.4 billion, representing a year-over-year growth of about 14 to 18%. And then, of course, they're also expecting record high adjusted EBITDA in the third quarter 2023 on a nominal basis, and adjusted EBITDA margin to exceed in the third quarter 2022 as well. And for the full year, they expect adjusted EBITDA margin that is modestly higher than the full year 2022 as well. So again, moving in the right direction. And when it comes to the balance sheet, incredible. Absolutely incredible, because if you take a look at cash and short-term investments, that is sitting at $9.5 billion, and their total liabilities are $10.4 billion. So they have plenty of cash to literally pay down all of their liabilities combined, and their long-term debt's only at under $2 billion. So we've got 5 times more cash than the long-term debt on the balance sheet. So absolutely incredible balance sheet here. Consistent growth in revenues, consistent growth in profitability, and you can see that they have now finally turned the corner towards profitability and now are generating a positive operating income, positive net income trailing 12 months at $2.3 billion. Shares outstanding pretty flat, and we got excellent margins at 82% gross profit margins. Net margins at 25%. We got very strong return on capital, common equity, and assets here. And if you take a look at net income per employee, $337,000, which obviously has turned positive from the 5-year average of being negative. Balance sheet, as I already mentioned, very, very strong, excellent current ratio. Debt to free cash flow doesn't really matter because they've got more cash than debt. And the growth is expected around 15 to 16% over the next 5 years for 5 to 10 years in their earnings per share. Now, when it comes to the valuation, if you come down here, statistics, trading at around 38 times earnings, a little under 10 times sales, and 22 times cash flow. So that is, again, not terrible, but definitely not cheap. So we are going to do our analysis, and again, we are going to account for both the earnings and the free cash flow to better understand what's going to be that intrinsic value for the business. Now, when it comes to the earnings, 15% has been expected growth for the company over the next 5 to 10 years. 14 to 15%. Free cash flow over the last 3 years has grown by 82%. We're not going to plug that number in because that's coming from a very low base of $350 million to almost $4 billion in free cash flow. So the growth has been stellar, but we're not going to price in 82%, 85%. We're going to go with somewhat reasonable numbers here. And the share buyback over the last couple of years has been negative 1%. So that's exactly what we're going to price in because they've got plenty of cash to buy back shares or even start paying out a dividend. You never know. So when we price in the numbers, so net income growth rate, I'm going to plug in 14%. Free cash flow growth rate, I'm going to do 20%. Again, not going to go with these crazy 82% numbers. Very reasonable, very conservative expectations of 20% growth in free cash flow and net income growth of about 14%. Both multiples, I'm going to keep steady at 20. So price to earnings multiple 20 times and free cash flow multiple of 20. Discount rate of 12%. We get 10% margin of safety, minus 1% share dilution. And I'm going to go 50-50 in the weighted average calculation for both EPS and free cash flow. And the fair value for Airbnb revised after the profitability, after being added in the S&P 500, after also accounting for fair free cash flow, we get down to a fair value of close to about $130 per share. And right now it's trading at about $132. So they're actually not that far off, almost at an intrinsic value. But of course, we want the stock to be trading at below the intrinsic value so you can buy it at a discount. We want the stocks to be undervalued, meaning they want to be, we need the stocks to be trading below the intrinsic value. So low 100s, call it around those levels, 105, 110, low 100s is a level where I would consider Airbnb to be a very, very nice opportunity to establish a position at those prices. So this right here would be that support that I would be watching at close to 104, low 100s for Airbnb. Of course, the lower the better. So even at $81, $82 would be a very nice opportunity for us to dollar cost average into. The balance sheet is what makes my decision a lot easier because they've got plenty of cash with little to no debt. I've experienced the product and service myself. It's phenomenal. And they have turned the corner towards profitability. That's exactly what we look for when we are investing in companies. So you can come over here and quarter over quarter, very nice profitability here. And again, revenue growing and 2022 earnings were very strong at just under $1.9 billion. So let me know in the comment section down below, what do you think about Airbnb? Support level is going to stay put at 104. and also in line with my undervalued levels. So 130 is going to be that fair value, but all the way down to $81 is going to be that next technical support in case we break down below 104. Resistance right now is going to stay put roughly around here, 154, 155, and we'll see if this S&P 500 addition leads to a further breakout. So 217, 218 is going to be that next resistance and target level to watch. So I hope you guys enjoyed this video and a complete update on this stock. Let me know your thoughts down in the comment section below. Don't forget to join our Patreon and Discord down with the link below. And also don't forget the fundamental technical analysis courses as well as the option scores currently 50 to 60% off, and the coupon code is going to be labor4, and this does expire tonight. And there is a 60% off bundle that gives you access to all the courses, the best value deal for again, the coupon code is going to be labor4, expires after midnight tonight. As always, happy investing. I'll see you all in the next video.